Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing where a company basically paid a monthly fee to keep the lights on, or rather their business combination alive. Believe me, it's more interesting than it sounds. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where people discuss this company filings. So what's the big deal? TL Acquisition Corporation, a special purpose acquisition company, or SPAC, needed more time to complete its initial business combination. Think of it like this: they had a deadline to find a company to merge with, and they were running out of time. To buy themselves an extra month, they had to deposit almost $25,000 into a trust account. That might sound like a lot, but in the world of corporate finance, it's basically pocket change to keep a deal alive. Let's get into the details. On June 13, 2025, TLGY Acquisition Corporation told Continental Stock Transfer and Trust Company that they intended to extend the period they had to complete their initial business combination. This period, called the termination date, was set to expire, and they needed an extra month, pushing it from June 17, 2025 to July 16, 2025. But there was a catch. To get that extra month, their sponsor, which is basically the group backing the SPAC or someone connected to them, had to deposit $24,494 ton and 34 the extension deposit, and called the extension deposit. Think of it as paying a fee to keep the option open. It's like putting a down payment on a house to give yourself more time to secure a mortgage. In this case, it's more time to find a company to merge with or offer. So what happened next? On June 16, 2025, the sponsor or someone connected to them made the deposit. As a result, the termination date was officially extended by 1 month until July 16, 2025. If that's pretty much the key takeaway. Now, why is this important? Well, it tells us a few things about TLGY Acquisition Corporation. First, it means they haven't yet found a suitable company to merge with. SPACs are created with the sole purpose of finding a private company to take public through a merger. It's essentially an IPO shortcut. The fact that they need more time suggests they're still searching. Second, it shows that the sponsor is willing to put more money on the line to keep the deal alive. That could indicate they still believe in the potential of finding a good merger target. However, it could also just mean they've already invested so much that they don't want to give up now. It's worth noting that this kind of extension isn't unusual in the SPAC world. Many SPACs need extra time to find a suitable target, and they often have provisions in their structure that allow them to extend the deadline, usually with the sponsor putting up more money. So what's my take on all of this? As the corporate decoder? Well, it's a mixed bag. On the one hand, the fact that the sponsor is willing to invest more money shows some level of commitment. It suggests they haven't completely given up hope of finding a good deal. On the other hand, the fact that they need an extension in the first place raises questions. Why haven't they found a target yet? Are they being too picky, or is there something else going on? One thing that jumps out at me is the entity is an emerging growth company. This means they are relatively new in the market. Fund likely don't have a proven business model. It's also important to remember that SPAC market has cooled off significantly in the last year or so. Many SPACs have struggled to find good targets, and some have even liquidated and returned the money to investors. This makes the environment challenging for SPACs like TLGY Acquisition Corporation. In terms of risks, there's always the risk that TLGY Acquisition Corporation won't find a suitable target and will eventually have to liquidate. In that case, investors would likely get their initial investment back, but they would miss out on any potential upside from a successful merger. On the opportunity side, if TLGY Acquisition Corporation does find a good merger target, there could be significant upside for investors. A successful merger could lead to a higher stock price and potentially strong returns. Ultimately, whether TLGY Acquisition Corporation is a good investment depends on your risk tolerance and your belief in the SPAC's management team and their ability to find a good deal. But for now, investors should wait patiently and watch. Alright, that's our breakdown of TLGY Acquisition Corporation's latest filing. What's your take on this situation and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.